Friday, December 9th, 2016. Monaco 64, home of alternative economics and contrarian views. So it's around 1:45 p.m. London time. I like to talk about extraordinary popular delusions and the madness of crowds. And it's a book by Charles McKay. And Charles McKay was a political economist from the 19th century. He wrote this book in 1841. This is a 1995 publication. Very popular book. And the reason I want to talk about this is because I think central banks are the biggest popular delusion of our time. And in this book, Extraordinary Popular Delusions and the Madness of Crowds, Charles McKay goes through, several episodes in the last 400 years or so in the Western world about these events that he calls popular delusions and madness of crowds. The first one is the Mississippi Scheme, John Law fame. The second one is the South Sea Bubble. The third one is the Tulip Mania in Holland. And the one that I'm most interested in is the alchemists. And why do I say that? Well, alchemists in the Middle Ages, they were trying to, turn lead and other base metals into gold, and they thought that they could become, very rich by turning base metals into gold, especially lead. And I think nowadays we could say that the central bankers are the alchemists. They think they can turn debt and paper into gold. And they've been doing it basically since 1971, when the United States dropped the gold standard and closed the gold window. Richard Nixon, the big shock, August 15th, 1971. And the reason I'm talking about this is because yesterday we had the ECB meeting. They decided to cut the amount of money printing they're doing from 80 billion to 60 billion. And 45 minutes later, we had the press conference, and the bank, the president of the ECB, Mario Draghi, spoke. He answered questions. And yes, I did watch that press conference, and it just made me more and more, it makes me always more and more convinced when I, have the, how can I say, the disposition to watch, either Mario Draghi or Janet Yellen or Mark Carney. It just makes me realize how these people are so deluded, and that the system is just totally screwed up. We don't need a few men or women in a big meeting room, in a boardroom deciding what the interest rate should be. And you've got all these reporters asking questions, and none of them, they seem to be in a bubble. But anyway, so that's, I'm not watching the ECB press conference because I love central banks or anything. I think they are the enemy, and I still think people should be their own central bank. And that means if you have, savings, always try to stack silver or buy some physical gold, because the money we have, the paper money we have, is not real. Look at what happened at the Dallas police and fire department pension fund. They basically, they don't call it a default, but you can't take your money out anymore. And, they've frozen redemption. So that's what the system is. It's promises and paper. It's nothing real. But one of the things I wanted to talk about is that Draghi reiterated, and now I'm turning to the markets, okay? We have gone from the extraordinary popular delusions and the madness of crowds, and believe me, we are in that right now, but we can still participate, but not enough to hurt ourselves. So the reason I want to talk about the ECB is that I listened to that press conference, and basically he kind of backtracked a little bit, Draghi, because I think the euro went up very strongly right after their decision, went up to like 108.80. And then I detected a little bit of backtracking by him in the press conference. He said, "Oh, we never talked about tapering. We only decreased the size. We can go back to 80,000. We never talked. No one in the meeting ever mentioned tapering, and they also lowered the rate that they can do QE at. They can go below their base rate." Because there's a lot of government bonds that are negative below their base rate. So now they can buy the shorter term government bonds that are, yielding way negative yields, and that steepened the curve. That could help the banks because they've got more, they can lend in the long term and borrow in the short term and make more money. But apart from that, though, his backtracking, saying, "Oh, it's not tapering," and I guess it wasn't. They just lowered the amount and they've extended the QE, and he said, "We will go back to 80 if we have to." So ever since then, the euro has been dropping, and right now the euro is near 105.50. It's down 0.5%. We got up to 106.30 earlier today, and I think the low was around 105 on Monday after the Italian referendum result. So yeah, the euro has dropped right back down, and that's why we've seen gold and silver drop a bit this morning here in London, because the dollar index has actually gone 5 a.m. London, it was at 101, and we're now at 101, around 101.50, got up to 101.60. So the dollar's stronger, so that's hurt gold. Even though yesterday, when the euro got strong after the ECB, gold didn't do anything. So figure that one out. So as I speak here, gold is down $6 at 1164.20. The range has been 1162.70 to 1172.20. The Dow is up 31. Surprise, surprise. 19,640. The high is 19,650. I think we're going to go to 20,000. Does it make sense? No, but that's where the market is. S&P up 2.5 points, 2250 roughly. Silver down 7 cents at 1693. Silver is down 7 cents at 1693. The pound is basically unchanged, and the dollar is very strong against the yen. We're at 115.13, up 1%. So that's helping the dollar index there as well. And what else? Excuse me. Yeah, the bond market, treasuries had kind of stabilized the last few days. We got back below 240. Right now, though, we're creeping back up. The 10-year note is 244. The 30-year, 313. The key level, really, two key levels to keep an eye on in the 10-year yield is 2.5, which we almost touched last week. And if we break 2.5, then 3% becomes the next target. And 3%, a break of 3% could be something, to keep an eye on. What else can I say about the markets? I think, the markets still have faith in the central banks. On balance, I don't have faith in them, but on balance, they still seem to have faith. But if they lose faith in the central banks, we could actually see, stock market and stocks that are based on real productive assets actually go higher. Look what happened in the Weimar Republic. The main, German stocks, big industrial companies actually did very well. Excuse me, and in Venezuela as well, the last year or two, with their hyperinflation, some of the Caracas Stock Exchange Index did very well. So I don't know. It's difficult to say. Gold and silver, of course, still very frustrating. I think longer term, though, it is the only insurance you have. I'm not saying you should withdraw from the system, get out of the system. I'm still in the system. I've got some money, paper money in the bank. I've got a brokerage account, but I've got my physical as well. So that's what I wanted to talk about. Will be, I think there will be a book someone else will write similar to this about, the last 100 years or so of the central banking delusion. But when that will happen, when the faith and confidence in central banks will evaporate, difficult to say. So the next big event now, prior to Christmas and New Year, when the markets will get quieter, is next week on the 14th, when the Fed is expected to hike rates, at least by 25. I don't think they'll do 50. So that's on Wednesday next week. So that's it for now. I'll talk to you later if there's anything else important out there. If you like this video, please give me a thumbs up, share it far and wide, and subscribe to my channel if you haven't yet. If you'd like to donate and help the channel, there's some links in the description below. Take care. Bye.